And then I can grab that, and then I can start to stream into the groups. Let's get this now into Discord. While that's doing that, paste. It's that one. Back to Facebook. Right, I just need to grab this live stream then. Just now. Copy. Paste. All right. Get this in the Ninja group. Hello.
Hi.
Hello, how are you?
I'm all right. What's all this about, this 11:15?
Well, the truth is that I was meant to do one yesterday, and I was really not in the mood, and my children were playing up, and I thought this is not going to happen today. So I took them out instead to get some fresh air because I think they needed it. So I thought I'd do one today, but I know there's a lot going on today, so I thought I'd jump on now, and then I can take the kids out for a picnic in the front garden later.
Right.
That was the idea behind it.
Making up for lost time then.
Yeah, and I knew that not many people did anything on a Friday, so I thought if people are a bit bored, they might want to just jump on. So
yeah, the markets aren't most excited at the moment, are they?
No, they're not. So we can have a look at some basics though, and just go through some stuff with some new beginners. So that's what
well, I'll watch with you, Sarah, and then I think I'm going to shut things down.
Yeah, I don't blame you. It's not a great day for trading, so just
no.
Streaming in. Right, that's that one. So I need to just go live in the financial freedom. That one I don't want to drop the Zoom link on because I don't want everyone jumping on. Right, okay, just for the members. So let's copy that. And pop that in there. Are you seeing Forex Factory on my screen, by the way? Is that all working?
Yeah.
Oh, good, good. So you can start studying the news while I get set up. So I thought that was some sort of do that.
Done it. Looked at it already.
I know you looked at it and just shut it down and went, no, not today, thanks.
Well, it's a couple of main points. Euro news and US and CAD. So
yeah, it's the US one that's the fun one. Good fun trading on the farm.
Well, there's that one at 3, isn't there? European central bank president speaks.
Oh, is all that as well going on today? Is it? Oh.
Yeah, I'll be on my 4th glass of red wine by then, I think. 4th bottle, if I do it right.
Oh, the thing is, I'm in a trade from like beginning of the week that's just stuck and it's just not moving, and it's either going to make me or break me today. I know that.
Well, I've got one of those from, when was it? I think it was Kevin's session yesterday morning, USD/JPY, and it's
just stuck. Everything's just kind of waiting, isn't it? It's almost like it's waiting for something to be announced or something to happen. So
would you suggest that I shut that down this afternoon if it doesn't look as though it's going to do anything?
Put a stop loss that you're happy to accept in, yeah, or
yeah, it's got all its safety mechanisms on.
Yeah, so if you've got a stop loss on there, then it's up to you whether you want to stay and wait for the news to see if it goes the right way. But it is gambling. At the end of the day, that is gambling. So
yeah,
you just have to be careful.
Okay.
Do you like my bunting, everyone?
Love it.
Good, isn't it? I thought I'd get some bunting going on for today, seeing as we've got VE Day. I've just made my children stand silent for 2 minutes, which was a massive achievement in my house. It was brilliant. And they was like, why are we doing this? They said, look, that's Prince Charles. Just stare at him and just don't laugh. And Harry got the giggles. But they did it. And then I explained all about what we were doing today. So hopefully some of it sunk in a little bit. So that was all nice. And then we're going out for a garden party this morning. Just me, Noah and Harriet on the front lawn. We've got bunting sectioned off our 2-metre ring. We're just going to be in there.
We've got some German neighbours. We're going to relive VE Day.
Going to be thrilled. What, you're going to get your Nerf guns out and stuff like that, and just oh my goodness. Right, okay, what am I doing? I don't know. I just thought I'd jump on. Right, okay, let's we're going to go through the BYOB. We're going to do literally, I'm going to break it right down, so because I know that lots of people in the free trial group jump on here just so they can kind of get to grips with what's going on. So if I'm teaching you how to suck eggs, I apologize. I know lots of you are fully aware of the basics of BYOB, but I'm kind of just doing this for anybody that maybe if you want to show somebody what it's all about, or you know, you can refer them back to this video to say, right, this is the bare basics, this is what you know, if you can master this, then you can trade. So that's kind of my thinking behind it. So I'm going to just go back to sharing screen. And when we trade, the first thing we always do when we trade is check what's going on in the world today and check what's going on in the news. And we do use this wonderful website called forexfactory.com, and they have a Forex calendar. And the calendar highlights any news that will affect the markets. And it highlights that news with the red flags. If you see a red flag, so today, Friday the 8th of May, you go to your particular day. If you see red flags, it's something you need to be aware of that's happening in the news that day that will affect the markets. Now, if we look on today, we've got the Euro and the Great British Pound. They're both on bank holiday today. That's why they're greyed out. So we've got bank holidays going on, which makes the markets go slow because all the banks are closed. So nothing's really moving around too much. We've got the Euro news. We've got the president speaking at 12 o'clock today. So that could affect things in a big way. That could either make the markets shoot up or shoot down. We will see. Now today, something very significant is happening in the Forex markets, and it's known as NFP Day, Non-Farm Payment Exchange Day. Now, this happens normally at the beginning or the end of every month, and I'm going to read you the Google analogy of what it is, because it will kind of explain it better than I can. Right. Non-Farm Payroll Report, NFP, is the monthly release of data on the 80% of the US workforce employed in manufacturing, construction and goods. As the name suggests, it does not include those who work on farms, and also excludes private households, non-profit workers and government employees. So basically, this is going to be, they're going to release a report today on 80% of the US workforce employment and manufacturing and goods. So that is why it will make a huge, huge difference to the markets. And it affects the US dollar, it affects the Canadian dollar, but it also oh, my screen's gone all funny up there, I don't know why. Let me just do that. Right, it also will affect all of the other currency pairs, the major pairs around the world as well, because the US dollar is a massive player when it comes to Forex markets. So if you are even thinking of trading today, please trade with extreme caution, as even though you might have learned how to trade, you might have learned how to draw up trend lines and all that kind of stuff, NFP could spike the candles and go through your trend lines where you thought they wouldn't go, or it could drop some of your prices and things like that. So you really do need to trade with extreme caution on NFP day. And I know a lot of traders just don't even trade today. So I'm not expecting to take a trade today, but I just want to go through some of the basics for you so you can understand a little bit what's going on with the markets. So that's the first thing we do anyway before we start to trade, is we check the news, and we avoid trading any pairs that are red flagged that would cause volatility within the markets on that particular day. So that's something you need to be aware of before you even open your laptops ready to trade. And I would say avoid trading an hour before and an hour after any red flag news. Orange flag is still significant news, but this is Euro all day today. So this Euro is going to be one to avoid all day, as well as the US CAD as well. Yellow flags aren't as bad, but if you get a lot of yellow flags on the same pair, obviously be aware of that as well. So what do? We need to go and find a trade signal. Now, what we do within IM Academy is when we join as a platinum customer, is it going to open up? Oh, no, don't crash on me. You get the harmonic scanner as part of your package, and the harmonic scanner is an amazing piece of kit. When you go into your IM center, you go to strategies here, click on there, let's open that up, and it will give you your tools, your trading tools. Okay, so this is your center, and you scroll down. All right. Oh, good. It's so slow. I do apologise. I know Rob Hunt was having trouble with his computer this morning as well. It's just sort of stuck. There we go. Right. Okay. So the harmonic scanner. This is the one you get free, your platinum package. These ones here are add-ons to your package. Okay, so if you want to use the vibrator tool, it will cost you a little extra when you join. I think it's like a $15 extra or something. It's really worth its money. So I would highly recommend that one. And anything else, I wouldn't recommend taking on anything else until you've got very comfortable with a very basic strategy first, and then move on as you progress through your IM center training. So the harmonic scanner is there, but for this particular strategy, we like to use I like to use the vibrator. I know that you can trade this strategy off the harmonic scanner, but I'm going to use the vibrator for this because you do get a lot more signals come out. So if this opens up for me, we will have a look at this tool. God, it is slow, isn't it? You wouldn't think anyone would be trading today because it's not vibrator, so I don't know why it's going so slow. But we can all watch the spinning wheel of death together, which is lovely. It's a group thing. It doesn't normally act this slow, guys. It's normally pretty fast.
I think you need more RAM.
I think I need to get the kids pedaling faster on the bikes outside to charge us up a little bit, don't we? They're not pedaling fast enough. There we go. No, my computer is dying, though. It really is. It's really just keeps crashing on me. So I do need to invest in a new one. Come on, vibrato tool. Oh my goodness. Is it gonna click into action? Is everybody else's working all right? I don't suppose you've looked at it today because with it being NFP day, but
yeah, mine's come up fine.
Oh right, okay. So you're going to take over now. I'm going to hand you over, and you're going to share. Oh look, we have got something going on. We've got some signals coming out. Oh, this is the way to show you.
Sometimes if this happens to me, if I stop the screen share just for like 30 seconds a minute, it lets everything catch up. But it looks like
okay.
that. But the screen share always slows my computer down. So.
Okay.
No worries.
It does, isn't it? It's a nightmare, isn't it? Right. So this is my vibrato. I don't know where to put people. There's like faces in the way of everything. Right, let's put them over there. Okay. So this is your vibrato tool, and what it does is it frustrates the hell out of you sometimes because sometimes it doesn't always load up very fast. But it's my computer. Right. Oh, come on. Right. Let's just do what. No, it's teasing me. Right. This sends out pairs for you to look at. Okay, this tells you that something is about to happen with this particular pair. What it does, it looks for volume bursts within the market. Now what happens is they come up down the side here, as you can see, and you can change these up the top to have 5-minute signals, 15-minute signals, hour signals, and we like to use the 15-minute for the vibrato. Well, I do, but you can use any time frame really. But for this particular presentation, I'm just going to use 15, but if I try to fiddle with this, it's just going to crash me, isn't it? So you can untick those, by the way. It'll just show you the ones you want. Right. Now, this looks like a lovely setup, but oh, do come on. Right, I'm going to do that thing that Paul said. Stop share for a minute. Okay, and let's try again. Apologies, peeps. Is it going to share again? Try. No, it seems to have crashed on me. Share. Oh. It's never none of it, is it? Right, okay. This isn't working at the moment for me. It's just, I think it's taken up too much on my computer. So let's try, and let's just go to Trading View. Ah! Right, all USD, remember that one. All USD, quickly, remember it. Right, what we do is when a signal comes in, we go to I go to my Trading View account. Okay, now Trading View is a website that you can sign up for, and you can trade. It's a trading platform. You can't actually physically trade off of it, but it's brilliant for drawing and looking and observing and looking at your pairs. So, AUD USD, was that AUD USD? Got memory like a sieve. What you do is you click on the pair that the vibrator tells you to go look at. Oh. You know what? I reckon we should all just go out in the garden with a Pims and a scone and just like abandon any form of trading today, because just technology is against us. Right. all joystick. Right. We will persevere for a little while. And if this is just not working, if this is just crashing, this is just going to be frustrating for people. So we will see how we get on. Right. The BYOB strategy is called Be Your Own Bank. And it really is a very simple newbie strategy for you to pick up. So what we do is let's get rid of everything on our chart. We want everything off because when you join TradingView, you won't have any of this stuff. You'll have a naked chart. So let's start from that. Just going to remove some stuff here. Right. This is a naked chart, okay? There's no indicators on here and there's nothing on here at all. So the first thing we're going to do is we're going to change, these are candles, okay? When they're red, they're selling. When they're green, they're buying. So when they're coming down, they're selling. When they're going up, they're buying. We want to change these candles to something called Heikin-Ashi candles, okay? And Heikin-Ashi candles are trend candles. They show you the trend of the market. See how this is flipped over to Heikin-Ashi? That's what you want to make sure these are on for this strategy. And there's your different candle options down the side there. Okay, so the first thing we've done, we've changed our candles to Heikin-Ashis, all right? Now, we can't just trade off of candles alone because you need more than that. This is just gambling. This is just guesswork, okay? We need a little bit more of, we need a higher probability of where this trade is going to go. So what we do is we're going to add something onto this chart called a stochastic indicator. Now, if you go up to your indicators, and you start to type in stochastic, it will come up in your public library. There it is, stochastic. We're going to add that onto our chart. Okay, so you want to add that on. Now, you don't need to change any of the settings for the stochastic. It literally is your default settings, and it's dropped it twice, which is a marvel, isn't it? Right. As you can see, what it's done is it's dropped this band at the bottom of your chart with a purple zone in it. And this purple zone goes from 20 to 80. Now, you don't need to know all the technical numbers. You don't need to know anything. All you need to know is, are these two lines outside of the purple zone? That's all you are first looking for before you take a trade, okay? Because what it is, when these two lines go outside of this purple zone, that means that the price has gone into what we call the extreme. So, as you can see, it was going up here, okay, and it's gone up into the extreme, which means this is overbought at this stage, okay? So if it's overbought because it's gone up for a buy, it wants to sell again. It wants to now start to sell because it's been overbought in this zone. So as you can see, the blue line on the stochastic was on top of the red line indicating a buy. It's gone up and it's gone into the extremes, setting up for a sell. Now, when these two lines come together like this, it means that the market is what's called consolidating. It doesn't really know which way to go. It's not until your red line crosses back over your blue line and brings it back down again that you know that the trend is changing and this is now becoming a sell. So as you can see here, the lines have crossed. And if you look at where the candles are, see we had green, 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 stochastics crossed over, the sellers have got in control of this in the extreme, and they've bought this, start to bring this down for a sell. So then what you want to do is you want to wait for this then to come back into the extreme, but you want to wait for it to be oversold. So you want to wait for it to drop below this 20 zone, outside of this purple zone, for it to then turn, cross, and start to come back up again. So literally you're looking for this up and down movement within the market, okay? And this is literally represented in this stochastic line. So as you can see down here, we had a little bit of consolidation, but the buyers have crossed back over the red, and now the buyers are on top of this red line, meaning the buyers are back in control of this trade and that they've bought it back up again. And you can see in the candles, the buy candles are formed and they've bought it back up again. So that is basically your stochastic in a nutshell. If you can look at this little line, these lines here on your 15-minute chart and think, is these lines in the extreme? Are they above the purple zone or below the purple zone? Then that is the first thing you look for. And if you can spot that, then you can become a trader. It's as simple as that. My 8-year-old son can look at this and he can look at the BYOB strategy and he can look at a chart straight away and know whether it's a good setup or not. That's how simple this strategy is why we love it. Okay. So the first indicator is your stochastic, and that's the first thing you drop on. It's just one indicator. Okay. Now we're going to drop something else onto this chart now, something called a PSAR, or a parabolic stop and reverse indicator. So just wait for my mouse to wake up. It's gone to sleep. Oh my goodness, everything's crashed. Right. Okay. Right. Next, we're going to drop on our PSARs. So you start to type into your search bar. PSAR. There we go. Parabolic SAR. That's the one you want. And if you put a little star next to it, it will save in your favorites. So you always go back to it. Now, what the parabolic SAR has done is it's dropped these dots onto your chart. Now, these are called stop and reverse dots, parabolic stop and reverse. And what they do is they will sit underneath the candles when it's in a buy situation, and they will help them candles to come up. Can you see they come up with this? And then what they've done is they've reached this point, they've stopped. They've reversed above the candles, ready for the sell. You see how they've stopped and reversed. And what we're looking for is that stop and reverse motion for the BYOB. So if you can see on this trade here, the first thing we look for is the stochastic in the extreme here? Yes, it was. The sellers crossed over, ready to bring this down, and the parabolic SAR stopped and reversed. This is what we are looking for to take a BYOB trade. Now, the third thing we want to make sure of is all to do with the candles. Now, because these are trending candles, we want to make sure that our candles have got a flat top for a sell or a flat bottom for a buy. If you can look at these candles, this thick part is the body of the candle. And these tiny little spikes are called wicks. We don't like wicks on this strategy. Wicks mean indecision. Wicks mean that this candle doesn't know what to do. Okay, we want nice strong candles with a flat top or a flat bottom. So as you can see here, these green candles, can you see how when this was up in the extreme here, they were sending out these big indecisive wicks? That tells me that this candle is trying to push up, but it can't push up any higher, which is a great way to tell whether this is going to come back down again. You've got all these wicks here. Now this little candle in the middle here, can you see how it's got a really tiny body and two wicks either side? That's an indecision candle. This is the candle that sort of went, hang on a minute, chaps, this is like, we're trying to get up here. We can't get up here. We want to come down again. This is, you know, the sellers are taking control of this. This is a doji candle. Okay, and this is another indication that this is about to turn. Then what you're waiting for is, see this candle here, it's got a flat top on it. That is a really nice, strong sell candle. Okay, so that means that that is ready to push down. If that had a big spiky wick sticking out of it, you don't take it because you're going to get stabbed. If you're trying to push that down, you're not going to get anywhere. Okay, you want these flat tops. So, but you need to wait for all of these things to line up before you get into this trade. You can't just have a stochastic without the PSAR. You can't just have a flat top without the PSAR and stochastic. You have to have all three lined up to take this trade. And that is why we're getting such a high win rate with this strategy, because we are literally, we're getting our checklist, which you will get in the Ninja team. Oh, look, it's all freaking out because of all my backgrounds. You'll get the checklist and you will check these three things, okay? You will must check that these three things are lined up before you even think about pressing buy or sell. And with these, we're not doing any fancy sell limits, buy limits, all that kind of stuff. We are just executing the trade. We are getting straight into the sell or we're getting straight into the buy when we see these things line up. Okay, so it is literally you press market execution, you're executing the trade straight away. You're going straight in with that trade. So where would we get into this trade at this point then? So let me show you. You would get in when your stochastic was or is in the extreme and your PSAR has flipped. So here is where the PSAR flipped up here. But the candle below the PSAR flip was a doji. Can you see that had wicks on it? So we wouldn't get in there. We would wait until this PSAR flip and this candle, because look, this candle had a flat top. This is the moment you'd get in. But if you look down here at the stochastic, at that point where we get in, the stochastic has started to move into this purple zone, but it was in the extreme. So you know that this is now, the sellers are now in control, because look, the sellers are above the blue line. There is a gap between the lines and they are bringing it down. And you know with this oscillator that this has got to come back down to the bottom. So you will know at this point that the PSAR is flipped, your candle is right, and your stochastics are heading the way you want them to head. Okay, so then what you would do on this particular candle, because these are 15-minute candles, I normally wait a good 2 to 3 minutes to make sure that this candle stays flat, because it could wick back up again while it's deciding what it wants to do. So make sure that this candle is definitely staying flat before you get in, right? And then what you would do is you would literally stay in this trade for 5 to 10 pips, and then you would close that and you would say thank you very much, and you would walk away, right? And if you look at this little ruler here, you can measure how many pips this one moves. So we would have got in on this flat candle here, okay? And you would start it to come down. You'd be thinking, oh, this is good, 4, 5 pips, 6 pips, 6.2 pips, 6.5, and you would have got to here and you would have got to 8 pips, and you would have gone, oh no, it must get to 10, it must get to 10, so I'm going to stay in this trade. And then look what happened, it started to turn, and this is the point where you're starting to go, oh god, what have I done? I've got no idea what I'm doing off, this doesn't work, Jesus Christ. And then you get to there and you go, right, okay, that's fine, that's called drawdown, because at the moment now you're in minus 3.2 pips, okay? But don't worry, because this is very normal, you're going to get that fluctuation. But then look, if you've got the nerve and you know that this is right, and you know that all those things lined up, you know this is going to start to come down, but look, start to come back down again. And you would have got your 10 pips, and if you'd have stayed in longer, you would have got all the way down here, and you would have got 25 pips out of that move. Not too bad at all. Now, I tend to go for 5 to 10 pips, or what I tend to do is I lock in 5 to 10 pips, and I move my stop loss to break even so that I can't get stopped out of this trade. And then what I tend to do is just leave a tiny little part of my lot size running. And then when I see this PSAR flip back again, I'm out of there. I'm like, right, that's enough now. It's starting to move. It's starting to turn. I'm getting out, right? And that's when I get out. But you do need to, before you take, when you take your trade, when you press buy or when you press sell, you need to put in what's called a stop loss. You need to put in a position on this trade where if this did turn, and say you come down here and you came down and you was doing really well and you're getting into drawdown, right? And say you're now in 2.3 pips drawdown. Okay, now you need to physically decide yourself how you feel about drawdown and how much drawdown you're prepared to get yourself into in order to get the pips that you are going to be the winners. So what you do is you either set a limit and say, right, I am not going to lose any more than 5 pips on this trade, and you just literally put your stop loss at 5 pips, or you say I'm not going to lose any more than 10, so I'm going for 10. If I lose 10, okay, it's a 1-to-1 win ratio, okay? Or you say, right, I'm pretty confident this is going to go where it wants to go. I'm going to give this trade plenty of wriggle room, so I'm going to set my stop loss above where the PSAR's flipped. And that is what I tend to do. Oh, I can't see it because of the bar. Okay, so the PSAR flipped here. So I would have a probably 16 to 17 pips stop loss on that particular trade. And if they started to turn, okay, and this started to, and my PSAR flipped, I'd just close it and say, right, okay, that's fine. I'll accept that loss. I'll get out. Okay. But you need to give it the wriggle room to do these little kind of moves. See how it kind of went into drawdown. You need to give it a little bit of wriggle room in order for you to get the prize at the end as it was. So that's where we put in our stop losses above the PSAR as part of the rules, but it's all down to how you feel about that trade. If the PSAR was like 50 pips above, then would you be prepared to lose 50 pips for a 10 pip gain? Probably not. So maybe that's not the trade for you. Don't forget that this machine calls out trades all day, every day, right? And there's probably 80 calls a day come out of this thing, right? So you don't need to take every trade. You don't need to take trades that you're not sure of. You only need to take perfect trades, the perfect setups, trades that meet all the criteria and that have not got ridiculous stop losses on there. They've not got really far parabolic stars that are really far away. So that's all down to looking at the trade, looking left and seeing how, you know, how the trade moves. Another thing we do is a little bit more advanced is we start to look at support and resistance lines, and you look at levels where you think this trade might go. It's moving by itself now, it's freaking me out. I'm not touching it, look, it's just going. I'm not even touching it. Tell you what, it's like spooky in here. So you would start to, as you go through your IM center, you will be taken through your training and you will be shown how to draw trend lines, how to draw support resistance. You will learn what a pip is, what a lot size is, how to calculate your lot sizes. So don't panic, you'll be shown all of that once you join, so don't worry about any of that. But what we can do is we can draw on something called trend lines to see what the trend of the trade is. So you can come up to here and you literally, you draw on a line where the candles have touched the most, and you want at least 3 touches for a trend line. So you could go there. Okay. So this is like, I'm trying to control this, but it's really glitchy. So let's just drop it there. Right. So as you can see, this is a trend line. This trade is going up. It's gone up, it's come back, it's touched the trend line. It's gone up, it's wandered around, it's come back, it's touched the trend line. And look, it's going up again. Now, when you look at these trend lines, when you look at this, you think to yourself, right, okay, so let's look at the bigger picture here. It's come down, touched this trend line. Now, it's either going to bounce off this trend line again, like it did here, to go up, or it's going to break this trend line. If this trade now breaks this trend line, comes down here, okay, not that drew anything. Oh, I'm going to go back to the whiteboard, I think, all this technology. All right. Come on, give me the brush. Okay, so if this trade now broke this, oh, this is not going to end well, is it? I'm going to end up drawing a cock and balls or something. A disaster. So let's not do that, just in case something pops up. Right. So if this trade broke this trend line, you'd expect it to come back up, retrace, touch the trend line again, and then drop. And as you can see, the stochastic is coming back up to the extreme. So that tells me that this could possibly now break this trend line. But because we've got NFP today, God knows what could happen, right? But normally these patterns, you know, these patterns in the market are pretty, you know, you can pretty much depend on these patterns. But today with NFP, because this is USD pair, God knows what's going to happen. This could drop like a stone or it could bounce back up again. So we wouldn't take a trade anyway today on NFP day. So that gives you a basic idea. And also what you can do is you can put support and resistance in to see, because there are natural lines of support and resistance when you look at a chart. Okay, and it's almost like if you had a tower block and you took away the front of the tower block and you saw all the floors in the tower block. Okay, this is what we're looking at here. What? I didn't touch. Right, it's jumping all over the place. Right. So what this does is you can draw on horizontal lines. And you can look at areas. Come on. Come on, let me draw something. Come on. All right. It's not playing ball, is it? You can look at areas where the candles like to meet up again. Like if you sort of had a visual line where my cursor's moving there, as you can see, that would be a line of support and resistance, because the candles went up, they touched, went back up again, touch, broke through, come back, touch. And then that line there would be a line that I think that would probably come down to and bounce back off again. But we will see. Okay, and you can draw those on, or you can use another indicator called auto support, which puts the lines on for you. So while you're learning, you can look at these. Is it going to do it? Come on, auto support, and it will put the lines on. I've got too many indicators on now, haven't I? What's that? Right, there's a ghost in my machine, right, and it's doing things for me. So please don't be put off by this. This is literally because my computer is absolutely rubbish and I'm screen sharing and I've got 1,000 things open and I've got a live ghost cam running. So I can't do anything. And I'm not shutting that down, so you'd have to put up with it. Right. So I don't even know what to talk about anymore. Do you know what? I'm going to stop share and I'm just going to check, right, make sure everyone's all right and they're still alive. They're still alive.
Still alive.
It's still here.
You were talking about putting the auto support on there.
Yeah, there's an indicator that literally puts the lines in for you, so you don't even have to do that, but you will learn how to do that within your IMA Centre. So it's an amazing place to go and learn the basics. And then as you progress, you will start to look at the BYOB, you know, just get used to putting those 3 indicators on and looking for trades. And just on demo, when you first start, just place trades, just get used to placing a trade on demo. So you get used to putting like market execution trades in, you get used to where you're going to put a stop loss, you get used to take profits, you get used to all that stuff. And then once you feel confident, then move on to the next level. But don't get completely overwhelmed and just try and do everything at once, because that's when you're going to get really, really confused. I think we've all been there. We've all come in, we've all started with a strategy. We thought we're the dog bollocks and we're all like, yeah, we're winning. And then something else will come along and we'll be like, hang on a minute, that looks better than what I'm doing. But actually what you were doing were fine. You didn't even have to change it. And you go and do that for a little while and it blows your concentration out, because now you're looking at things that you wasn't looking at before, and you forgot to look at things that you was looking at before. And you will go on this kind of washing machine spin cycle for quite a while until the washing machine stops and you settle at a level that actually that's where your brain fits the most. That's the strategy that you get the most. That's the one that's been the most productive for you. And then you really, this is the hardest thing, is you need to stop looking at everything else. Okay, you need to just look at what you like, what works for you, what fits your lifestyle, what fits your fear level, which fits your, you know, do I want to be in a 100-pip drawdown? Yes or no? No. Right, then don't do swing trading. You know, so find something that actually works for you, you know, mentally, and don't take on too much, basically. And I think a lot of us have done that cycle where we've gone off, we've tried to learn all this fancy stuff, these trend lines and these, you know, all these fib levels and all this stuff like that. And actually what it comes down to is that the 3 criteria that we just learned actually worked. And we didn't need to look at all that other stuff. So I've come back to BYOB. I went off and designed my own strategy like you do. You think you're like, you know, you think you're invincible. And me and Joe went off and done this Bravo, and it was really good. And it was all about support, resistance, breaking lines and MA crosses and all this sort of stuff. And it worked. But when it didn't work and the markets went against us, that was a huge, big stop loss. And that was a huge, big loss. And it used to frighten me because I'd have trades running overnight and it didn't work, so I didn't like it. So I've gone back to this because I like to just come in, go, right, I need 5 pips today, right, what's going, oh, that one's set up, right, take, fine, okay, done it, thanks. And I just like to, that's it, that's all I want to do. I don't want all the drama. I don't want to be in a trade for a long time. So the BYOB works really well for that particular sort of style, if you like that. But if you don't like that, if you don't like to just come in and grab pips and go, and you are very technical and you love all these indicators and you love to put all this stuff on, and you love all this, you know, fancy stuff, then study something that's a little bit more advanced. If that suits you, then do that. Okay, it really is down to what suits you. And you won't know. If you're new, you will not know what suits you yet. I promise you, it will take you time, and it will take you maybe, you know, making some mistakes. It will take you, you know, it could take you a year to find your exact style. But all the time that you're looking for your exact style, you're learning what not to do or what works for you. And in the end, you will hone down onto one thing that is the perfect thing. So, you know, this trading is a skill for life, but you're not going to learn it in 5 minutes. So don't be put off if you make mistakes, if you lose trades. You know, it's all part of the journey, and everyone needs to go on that journey to be a successful trader. So we're setting you off in the best way possible with our support and our help and our chat groups and these live sessions, so you can physically watch me make a mess of my chart, you know. Computers break down. It happens to all of us, you know. It's just one of those things. And if you're having a bad day and your trading's not going so well, don't trade anymore that day. Honestly, just say, right, today's not working out for me, let's just go and do something else and we'll come back tomorrow. The markets are going to be there every day. Okay, they're always there for you. Okay, and if they're closed at the weekends and you've got that itch to scratch, then just go in and just play with the charts, draw trend lines, all that sort of stuff, see what worked, see what didn't work. So there you go. So, you know, I'm not going to look for a trade today because it's pointless, because it's LFP day and whatever I say could go the wrong way and everyone would hate me because they've all lost lots of money. So I'm not going to do that anyway. But I just wanted to jump on and just sort of say to everybody, you know, just like stick with it. Honestly, it's the best thing ever. With our group and everything, it's the best thing you can ever do. And to have that skill, and it's pretty cool as well, actually, when, you know, people say to you, what do you do? You tell us, oh, I trade Forex. It's pretty cool. You've got to admit, it is pretty cool, right? So, you know, if you're going to be a cool dude, trade Forex. It's really, really good. People don't expect you to say that. Right. So anyway, it's coming up to 12 o'clock, and I know it's a little bit early, but, you know, my kids are desperate to go and have a picnic in the front garden. So I just wanted to jump on and wish you all a happy VE Day celebrations, whatever you're doing. Stay safe, everybody, and eat lots of cucumber sandwiches and things today. And
plenty of pims, Sarah. Plenty of pims.
Oh, yeah.
Oh, yeah, got to have the pims.
Hymns, definitely.
red wine, champagne.
We're going to have the best time ever. Maybe we should all do a live later when we're all a bit drunk. That'd be fun, wouldn't it?
Oh, that'd be hilarious, that.
I'm in for that.
Get Paul to do his NLP when we're all a bit drunk. We'll be like, oh, I'm seeing all sorts of things now. This is great. Be fantastic. But no, thank you all for jumping on. And I hope, you know, if anything, that gave you a bit of a be good and don't be silly and just, you know, find your own style. Okay. Just honestly, don't worry. It's a learning journey and you're all on it. We're all been on it and we're still on it. And, you know, we'll get there. Everyone will get there. You just have to believe. Okay.
Cheers, Sarah. Thanks a lot.
No, have a great day. I'll see you next week, everyone.
Cheers.
Yes, Sarah. Bye.
Bye, everyone.
Bye.